in 2006, 2 full years before the worst financial crash in American history. Warren Buffett quietly started doing something that almost nobody noticed. He began warning the world, he began selling stocks, and he began hoarding cash at a level nobody had ever seen before. 2 years later, the entire American financial system collapsed, and Warren Buffett made billions buying the wreckage. Now, in 2026, he is doing the exact same thing again. Right now, in 2026, Warren Buffett is sitting on the largest cash reserve in Berkshire Hathaway history, over $325 billion US. He has been selling stocks, including cutting his Apple position in half. He has been warning about debt levels. He has been warning about market valuations. He has seen this before. He has done this before, and every single time he has done this, a major financial event has followed. In this video, I am going to take you through the full story of how Warren Buffett predicted the 2008 crash 2 years before it happened. Then, I am going to show you the exact signals he used to see it coming. And then, most importantly, I am going to show you what those same signals are telling us right now in 2026, and what every American needs to do about it before it is too late. Stay until the end, because the last section of this video contains the exact action plan that will determine whether the next potential crash destroys your wealth or becomes the greatest financial opportunity of your lifetime. The difference between those two outcomes is entirely about preparation, and preparation starts right now. Let's get into it. This is the story of the man who saw 2008 coming and may be seeing 2026 the same way. Let me take you back to Wall Street in 2006. The American economy is booming. Housing prices are rising every single month. The stock market is at record highs. Americans are borrowing money to buy houses they cannot afford. Banks are packaging those mortgages into complex financial products and selling them to investors worldwide. Everyone is making money. Everyone is celebrating. And almost nobody is asking the obvious question, what happens when this stops? Warren Buffett was asking that question. While Wall Street threw parties and paid record bonuses, Warren Buffett sat quietly in his office in Omaha, Nebraska, reading, studying annual reports, examining balance sheets, looking at debt levels across the American financial system. And what he saw troubled him deeply. He saw a system built on borrowed money, a system where the risk had been hidden, not eliminated, and he knew from history exactly how stories like that end. In his 2002 annual letter to Berkshire Hathaway shareholders, 6 years before the crash, Warren Buffett wrote something that should have stopped every American investor in their tracks. He called derivatives, the complex financial products at the heart of the housing bubble, financial weapons of mass destruction. He said they posed a systemic danger to the entire American financial system. He named them, he described the risk. He published it for the entire world to read. And almost nobody listened. But Warren Buffett did not just warn with words. He acted starting in 2005 and accelerating through 2006 and 2007. Berkshire Hathaway began selling stocks and accumulating cash at a historically unusual pace. While every other major investor was buying, Buffett was quietly selling, building a cash reserve. Waiting. He was not panicking. He was preparing. And the bigger the cash pile grew, the clearer his message became to anyone paying close enough attention. Warren Buffett could also see the housing bubble clearly when most Americans could not. He watched house prices rise at rates that had no connection to economic reality. He watched banks give mortgages to people who could not afford them. He watched those mortgages get packaged into securities that nobody truly understood. And he watched the entire American financial establishment convince itself that this time was different, that housing prices would never fall, that the system was safe. Warren Buffett knew it was not. And he was right. September 2008. The collapse that Warren Buffett had seen coming for 2 years finally arrived. Lehman Brothers, one of the oldest and most powerful investment banks in American history, filed for bankruptcy. It was the largest bankruptcy in United States history. The shockwave that followed hit every corner of the American financial system simultaneously. Credit markets froze. Banks stopped lending to each other. The entire machinery of the American economy began grinding to a halt. On September 29, 2008, the Dow Jones Industrial Average fell 777 points in a single day, the largest single-day point drop in the history of the American stock market at that time. Trillions of US dollars of wealth evaporated in hours. Retirement accounts across America were devastated. Americans who had worked their entire lives to build financial security watched years of savings disappear in days. The fear was total. The panic was real. And it was exactly what Warren Buffett had spent 2 years preparing for. While every other major investor was selling everything they owned, Warren Buffett picked up his phone and started buying. In the middle of the worst financial crisis in a generation, he invested $5 billion US dollars in Goldman Sachs, $3 billion in General Electric. He wrote a famous opinion piece in the New York Times titled, "By American, I Am." He told every American reading it, "I am buying US stocks right now, and I am buying a lot of them." The panic around him was irrelevant. The preparation he had made was everything. 5 years later, the results were in the $8 billion US dollars that Warren Buffett deployed during the darkest days of the 2008 crash had grown to over $28 billion, a $20 billion profit. From staying calm while the entire world panicked, from preparing 2 years in advance, from reading the warning signs that everyone else ignored, from having the cash ready to act when the opportunity arrived. This is not luck. This is not genius. This is discipline. Applied consistently over decades, Warren Buffett's most famous investing rule was never more visible than in 2008. Be fearful when others are greedy, and be greedy when others are fearful. In 2006 and 2007, when others were greedy, Buffett was fearful. He sold, he built cash, he prepared. In 2008, when others were terrified, Buffett was greedy. He bought, he deployed, he profited. The rule is simple. Executing it requires the kind of preparation and discipline that most Americans never develop. Until now. Now, let's talk about right now, 2026. Because the pattern Warren Buffett followed before 2008 is appearing again, and this time the numbers are even more dramatic. The American stock market is at or near all-time highs. Valuations, measured by the price-to-earnings ratio, are at levels only seen a handful of times in American stock market history, and Warren Buffett is once again doing something that every American investor needs to pay very close attention to. Warren Buffett's Berkshire Hathaway is currently sitting on over $325 billion US dollars in cash and short-term US Treasury bonds. That is the largest cash position in the history of the company. To put that number in perspective, $325 billion is larger than the entire GDP of many countries. Buffett has more cash sitting idle right now than most nations have in their entire economies. He is not investing it. He is not buying stocks with it. He is waiting. And when Warren Buffett waits with this much cash, history tells us something significant is coming. In 2024, Warren Buffett made a move that shocked the entire American investment community. He sold approximately half of Berkshire Hathaway's position in Apple. Apple, his single largest holding, the company he had called one of the greatest businesses in human history. He sold half of it, raising tens of billions in additional cash. When asked why, he pointed to tax considerations. But investors who follow Buffett closely noted that he almost never sells great businesses for tax reasons alone. Something deeper was driving this decision. Then there is the U.S. national debt. In 2026, the United States national debt stands at over $35 trillion US dollars. The annual interest payments on that debt are now consuming a larger share of the U.S. federal budget than at almost any point in American history. Warren Buffett has spoken about this publicly. He has called the trajectory of U.S. government spending unsustainable. He has said that the dollar faces long-term challenges. These are not the words of an optimist who sees clear skies ahead. And here is the pattern that should concern every American investor. Before the dot-com crash of 2000, Buffett hoarded cash and avoided technology stocks. The crash came before the 2008 financial crisis. Buffett warned about derivatives and built a massive cash reserve. The crash came. Now, in 2026, Buffett is building the largest cash reserve in Berkshire history, selling major positions, warning about debt and valuations. The pattern is identical. History does not always repeat exactly, but it rhymes. And right now, it is rhyming very loudly. Let me show you the 3 specific warning signs that Warren Buffett watches most closely, and what each of them is saying right now in 2026. Warning sign number 1, the Buffett indicator. This is a measure that Warren Buffett himself has called probably the best single measure of where valuations stand at any given moment. It compares the total value of the US stock market to the total size of the US economy. Right now in 2026, this indicator is flashing at levels that have only been seen once before in American history. In 1999, right before the dot-com crash. Warning sign number 2, commercial real estate. Across America right now, office buildings are sitting empty. The work-from-home revolution that began during the pandemic has permanently changed how Americans use office space. Banks that lent trillions of US dollars against the value of those now. Empty buildings are sitting on massive potential losses. Regional American banks are particularly exposed. This is not a distant theoretical risk. It is happening right now, and it has the potential to create a cascade of financial stress across the American banking system. Warning sign number 3, American consumer debt. Right now, US credit card debt has reached an all-time high. American consumers are carrying more credit card debt than at any point in history, and the default rate, the percentage of Americans who cannot make their minimum payments, is rising rapidly. When ordinary Americans start defaulting on their debts in large numbers, it creates a ripple effect through the entire financial system. Banks lose money. They tighten lending. Businesses cannot borrow. The economy slows. This was one of the key triggers of the 2008 crises, and it is building again right now. And here is what Warren Buffett is doing with this information. Right now in 2026, he is sitting patiently on $325 billion in cash. He is not panicking. He is not selling everything. He is simply waiting. For what? For the moment when fear replaces greed. For the moment when great American businesses are available at prices that reflect genuine long-term value rather than short-term speculation. He has seen this moment arrive twice in his lifetime. In 2000 and in 2008, and both times he was ready. He intends to be ready again. Warren Buffett has never once predicted the exact timing of a market crash. He will be the first to tell you that nobody can do that reliably. What he does is identify when the system is fragile, when risk has built up to dangerous levels, and position himself accordingly. He does not know if the next crash comes in 6 months or 3 years, but he knows that when it comes, he will have $325 billion ready to deploy, and every American who takes the same approach at their own scale will be in the same position of strength. So what should every ordinary American do right now? Given everything Warren Buffett's actions are telling us, I want to be very clear about something first. This is not a prediction that a crash is coming tomorrow, or next month, or even next year. Warren Buffett himself is not predicting that. What he is doing is preparing. And preparation, at any time, for any American, is always the right move. Here is your exact preparation plan. Step 1. If you do not have a fully funded emergency fund, build one right now. 6 months of living expenses in a high-yield savings account paying 4 to 5% APY. This is not optional. This is the single most important financial action any American can take right now. An emergency fund means that if the market crashes, if you lose your job, if something unexpected happens, you do not have to sell your investments at the worst possible moment. You have time, and time in a market crash is worth everything. Step 2. Keep investing consistently every single month, regardless of what the market does. Do not try to time the market. Do not wait for the crash before you invest. Dollar cost average into a simple low-cost S&P 500 index fund, like VOO or VTI, every single month without fail. If a crash comes, your automatic contributions will buy more shares at lower prices. You will look back years from now and be grateful for every share you bought during the fear. Step 3. Reduce high-interest debt aggressively right now. In a financial crisis, debt becomes a weapon that works against you. Eliminate it before it has the chance. And here is the mindset that changes everything for every American investor. A market crash is not a disaster for the prepared investor. It is the greatest buying opportunity of a generation. Warren Buffett made $20 billion from the 2008 crash, not despite the fear, but because of it. Because he was prepared. Because he had cash ready. Because he understood that great American businesses on sale are the opportunity of a lifetime. Every American who builds their emergency fund, pays down their debt, and keeps investing consistently is following the exact same strategy, at their own scale, with their own timeline. But the same principle. Let's bring it all together. Warren Buffett predicted the 2008 crash 2 years early by watching 3 things: dangerous debt levels, overvalued markets, and complex financial products hiding real risk. He prepared by building cash and selling overvalued positions. And when the crash came, he deployed that cash and made $20 billion. Right now, in 2026, he is building the largest cash reserve in his company's history. The same warning signs are flashing. The same preparation is happening. Whether a crash comes or not, every American should be doing the same. Here is my challenge to every American watching this video. Do one thing today. Check your emergency fund. If you do not have 6 months of expenses saved, start building it this week. That single action puts you in Warren Buffett's position, ready for whatever comes next. Drop a comment below and tell me, do you think another crash is coming in 2026? And are you prepared? I read every single comment and will personally reply. Every good financial decision you make today, your future self will thank you for. The best time to start was yesterday. The second best time is right now. If this video helped you understand what Warren Buffett is doing right now, hit like and share it with one American who needs to hear this. And if you want to know why Warren Buffett never invests in gold despite everyone telling him to, that video is right here. See you there.